I think the 13% return on equity is a standout. You know, it's the third quarter, it's seasonally kind of a quiet period, and 13% is a great number. Now, I think people might pick at a couple things in the results. The comp ratio was a little bit lower, so maybe there's a little bit of pull forward. The tax rate was a little bit lower, but very good revenue quarter. Expenses were under control, and 13% return on equity.
It's not a standout from some of the other banks we've seen already report.
Excuse me?
It's not a standout from some of the other banks we've already seen in terms of their reports with return on equity.
No, I think we're seeing right now, I think in the banking space that things are very healthy. So there's clearly, I think, some consternation in the market around where are we in the cycle? Are we late cycle? Are we getting closer to kind of peak earnings or peak net interest margins? But we're seeing very good results. And I think
15% and 17% in some cases.
Exactly. And so, what we're looking at is stocks that are pricing in kind of a late cycle, almost recessionary environment where financials are a couple multiple points below historical averages compared to the S&P 500, which is essentially at historical averages.
So based on these numbers, is there anything you will change in your model in terms of how much this company should be worth?
1.1 times book value is a little bit low for a 13% return on equity. So I think that's one thing. I think the bigger story here is, David Soloman's been in his seat as CEO since October 1st. So what is going to happen under David Soloman's era? What are they doing on the consumer side? And that's really what we're looking for. We're going to get some color on the call.
But give us a sense of what your sense is going to be in terms of the transformation of this company. What you think, if you think there's going to be a transformation of this company?
Yeah. So I think something that people don't appreciate is, a quarter of the employees are engineers, technology engineers. So there's a big digital push here at the firm. A lot of it's happening on the consumer side, the wealth management side, which is obviously not historical Goldman businesses. Right. And so I think that's where there's going to be growth. And they've done some things kind of behind the scenes. They bought Clarity Money, which is a digital app, which to me is very interesting. Marcus is, I think, the first inning of what they're going to do on the consumer side. So I think that's where growth will come from.
That's the right move. And by the way, all of a sudden we're moving now into a world of volatility, which in the old world of trading would have been very good for Goldman Sachs.
Yeah, I mean, it's a fair point. I mean, the reality is that the growth in the kind of the legacy businesses like fixed income trading, equity trading, it's more muted than the past. And so I think as you're looking forward, you have to find pockets of greater growth. And the good news about Goldman is they're not trying to retrofit technology into kind of an old platform. They're building from scratch on the consumer side, and we like a lot of things we're doing. And I think, again, we're kind of in the early inning of David Soloman.
And do you think those, though, can ever be the kind of high margin businesses that they've had historically?
Absolutely. I mean, the consumer side, if you think about, digital kind of leveraging technologies or infrastructure, not having branches, being able to connect a lot of products into a digital storefront, like that's very high margin if you can scale it. It's a scale game, and I think that's the key question. So we're going to look for some color around what the strategy is there, especially now that David is formally in his seat as of October 1st.